can hear me? And then today we're going to talk about a very tricky topic, which is the U.S. election. I know that a lot of people are interested, and we have done some research, and this will be ongoing effort until November, the election. And today on the call with me also, Paul Dervino. Paul, you there? Hello? Okay. Paul?
Yes, I'm here.
Great. A lot of you may already know Paul very well already. He's been with us for 10 years. Overall, he has over 40 years of experience in the financial industry, being an American himself. Of course, he's well versed in a lot of election issues, and he was just telling me that the last election cycle, we made the right call and helped a lot of people with the markets related to the Trump election. Okay, and key takeaways. This is not an easy topic. It is a big topic. When we talk about U.S. markets, we think that the U.S. election is probably the top issue right now. And then you will see a lot of data and reports saying that U.S. markets typically does well in an election year, a lot of numbers, and then people play with a lot of different permutations, whether the elected president is a Democrat or the previous president is a Republican or whatever, different possibilities. People even go into the details of how each sector performs with respect to each of the scenarios. And overall, I found a little bit perplexing because people give a lot of numbers, but they don't really give you exact reasons why the market goes up. We actually don't know what the exact reasons why the market does well in an election year, but we do want to give you the data so you can make a decision. At the end of the day, this is about data mining. This is called data mining, which is you have the data, you have the evidence, but you don't know why this is the case. Unfortunately, we have to stop there because that's not that helpful in terms of fundamentally understanding the election. But the fact is, like I said, U.S. stocks tend to do well in election year, also in the first year in the new presidential term. That means in 2024 and 2025. Now, let's go back to the stuff that we do know. I talked about earlier that there are a lot of things that we don't know about election. We're not political experts, except for Paul. He's quite good with this type of things. Let's stay with the stuff that we are good at and we know about. For example, energy, right? We talked a lot about energy previously about as one of the barbell approach. Remember, food, energy, and AI, those are the two barbells. For energy, we think that Biden winning is positive for clean energy, new energy for sure, and Trump seems to be more supportive of traditional energy, being the oil and the gas. We'll talk about that more later. And then in terms of the antitrust, and very few people talk about this, according to the reports we read, and Paul was really early in help us identify the key issue here. Again, going back to the barbell approach, you think about AI, if you think about what happened to Microsoft and NVIDIA. Just 5 days ago, we have a FTC, Department of Justice probe into the antitrust cases potentially for AI. Okay, that is also related to the election, believe it or not. So we think that Democrat winning will probably result in continuing the antitrust probe and regulatory pressure on AI companies and big tech companies and big farms, et cetera. And if Trump wins, hopefully we will have a change of leadership in the FTC or Department of Justice or whatever, and relieve a certain pressure in that case. We also talk more about that in detail. In terms of China, everyone knows that Biden is very much into so-called tech war, and Trump will probably continue his usual bread and butter trade war. Goldman has a report saying that election trades usually start in September or the fall. Now, is it too early to talk about it? No. Two unique things about this election cycle. Number one, very early in the game, we already know pretty much who's going to compete, right? Biden and Trump. That's pretty much set in stone. And we have a existing president running against an ex-president. In both cases, we know the candidates very well because they are both presidents. Unlike in other years where you have a brand new candidate with no idea who he is and what he has done in the White House. So there's a lot of data, a lot of facts that people can analyze based on history. That's why I think people will start analyzing early. So it's better to prepare early than late. What to watch? So part of our job to help you track on a forward-looking basis what's happening with the election. The very first thing that comes to mind is we will have a first presidential debate on June 27th. And then, of course, you have the Trump case sentencing on June 11th. The primaries are both important for Republicans and Democrat, especially for Republican, determining who the vice president candidate will be. And the election day will be on November 5th, and we should know the results by about 1 p.m. on November 6th. Also, very unique in this election cycle. Remember last time we had a riot on Capitol Hill, even after the election was completed during the electoral college vote. So let's also watch that in January of 2025, and then inauguration will be sometime in January 20th of 2025. So again, you can count on us to help you track this. We have Wealth Daily. We have a lot of daily ideas and regular emails. We'll talk about these events from time to time. Maybe not every day, but from time to time. That's very important to sign up for our PWM Wealth publications, okay? Now, where to track the election odds or polls or the progress, okay? So Paul just corrected me that saying that there's a difference between polls and odds. We will answer that question later in the Q&A. Basically, you need to track both. There's a website called 538.com that offer polls, and there are also 270 to win to track the odds. We also have U-Trade ourselves. Our marketing team was very kind to put together a topical section on U.S. election alone. If you're not aware of it, please check it out. That includes both our in-house views as well as third-party views. Okay, just talk about the calendar and where to track all the things. The very first thing probably you want to know is about Trump, right? We answered this already about his legal case. Will he go to prison? Paul, what do you think? Most likely a probation and a fine?
Well, it's very unlikely that Trump will get any prison sentence because most of the time judges stick with what is a recommended sentence. And for a 70-plus-year-old first-time offender of New York of a Class E felony, the recommended sentence would be probation and a fine.
Got it.
It is possible Trump could get something a little more severe since he kind of annoyed the judge so much during the trial. And that is an actual reason. That's not like the judge being naughty. That's actually a reason for a more severe sentence. But if it's more severe, the judge could just sentence him to community service or something like that. You could see Trump working in a soup kitchen or something.
All right.
Okay.
Well, maybe serving his own steak. Anyway, well, can he still run for president? We cleared that already. No constitution bans anybody who is convicted or in prison to run for president. In fact, we have previous cases where convicted criminals that run for president. Now, the tricky question is, can he serve as president if he's elected and he will be in prison? First of all, we already argued that it's unlikely that he will go to prison, plus he can also appeal, and there are actually no precedents to judge from what will happen. So it's a very tricky question. Theoretically, Constitution could render him ineligible to act as president because he's lost his personal freedom. But the president could also decide that to release Trump because they can't possibly house a U.S. acting president in prison, meeting all the safety standards. And another trick question is, can he pardon himself? It's very unclear at this point. Again, no precedents that we can judge from. And then in terms of the election odds, or whether winning more support after Trump's conviction, polls show that Biden probably picked up a very minor percentage point, probably a statistical error, not meaningful. But if you look at Republicans and look at hardcore Trump fans, they continue to be firmly behind him, and then you get more, for some reason, more donors, more money from the ultra wealthies donating to Trump. Okay, that's Trump's problem. Biden has his own problem. The key focus today is about his mental fitness. It's very well known. Remember, we talk about the presidential debates. In addition to paying attention to the contents of the debate, I think people will be watching for whether Biden is senile or whether he can really speak coherently and articulate on certain topics, right? So that will be a key focus. And you can see a lot of bad press already about Biden. Wall Street Journal just come up with an article not long ago about this topic, and Donald Trump insisted that Joe Biden take some drug test or whatever. Having said all this, what's our view on the election? Again, we're not political experts. We have no crystal ball, but let's try to make a stand here. Number one, no doubt that Biden and Harris will be the president and vice president nomination for the Democratic Party, and look like Trump is highly, highly likely to be the front runner for the GOP, but we just don't know who the VP is. That's why the Republican GOP convention is key to watch, knowing who will be his second-hand man. And then at this point, things changing very fast. At this point, if you look at the odds or the polls, seem to suggest that Trump is likely to win just at this point, but it's not certainly not a sure bet. And like Paul said, there's still multiple people on the ballot as of now. People like Kennedy, who's running on his own platform independently, that may take votes away from both candidates. And there's a reason we'll put Chase Oliver on this. Paul, can you remind us why Chase Oliver is?
He just didn't make the graphic because he only got his nomination of the Libertarian Party recently. Yeah. But the importance of Chase Oliver and Jill Stein is they're from established third parties or third and fourth parties. Yeah. So they will be on every single ballot, all 50 ballots across the United States. Whereas Cornel West might have some people saying they support him, but he may wind up only being on a handful of state ballots. So he'll garner very few votes.
Well, there was a Trump you want to say about anything? He's more pro-China or something?
It is interesting that of all the candidates that the libertarians are very much in favor of free trade. Yeah. And so Chase Oliver is sort of against all the, doesn't believe in all these tariffs. And he also doesn't understand, the way he would present it, why the U.S. is running a foreign policy that's basically annoying China and making an enemy out of China instead of just trying to get along with it.
Yeah, so I think the point is just to show people that there is a political voice in the U.S. that's not pro-China, but at least against the trade war, right? But unfortunately, not unlikely to win. And then moving on to the next topic is, if we will talk about China, if we talk about Biden versus Trump, that's kind of the key topic for today. Here, again, I listed some of the key conclusions. I talk about the stock market performance. There's some numbers you can use as a reference, but again, beware that do not data mine, meaning that if you do not understand why these stock perform well in election year, just use as a reference only. We also just use as a reference. We don't have good explanation. That's always very important. What is the fundamental reason why the stock market does well in election year? We don't know. Okay, so that's the pitfall of using those numbers. On tax cuts, there's some issues with respect to the Trump tax cuts in 2017 that will expire, and Biden will likely to stop that and maybe even raise the taxes for the rich, because that's what Democrats do. And Trump promises to renew the individual tax cuts, which should be good for the market, but that will probably do some harm to the budget deficit and bad for the Treasury. You have something to say, Paul?
Yeah, just to clarify, so the Trump tax cuts began in 2018, and there's cuts to corporate and personal tax. The corporate tax cuts were probably more influential on the market, meaning that, basically they make corporate earnings go up, so they're great. Those are not expiring. So it is only the personal tax cuts that lowered the top tax rates for generally for wealthy people, that those tax cuts are going to expire at the end of 2025.
Got it. Okay. Energy industry, we gave you the conclusion earlier. Now, it's very interesting with respect to Elon Musk and Tesla, right? So on one hand, Tesla is a company fitting to the democratic agenda, the climate change, etc. But on the other hand, you have Elon Musk recently spoke very negatively about Biden. And then you look at Trump. Trump now says he wants to stop or slow the EV sales in the US, but he also said he wants Musk to be his political advisor or economic advisor, whatever. So there's very conflicted things here we don't understand. I just want to show to you it's interesting. And the most important two things we want to talk about today is the FTC antitrust and China. Again, some numbers here to show you that, that confirm what we just said earlier. Markets do well in an election year. We don't know why. Just to show you that we're not crazy to think that market, this year would do well, next year would also continue to do well because of the statistical numbers. Okay, like I said, two most important things, FTC and China. What's happening with FTC? When Biden took office, since then, we had a record number of antitrust enforcement. So you probably have not noticed, but we did dig up some numbers to show you, especially this lady, FTC chairwoman, Lina Khan, who took office since 2022 as whole year. When she completed the whole year of 2022 in office, we have a record number of these antitrust, kind of a pre-merger antitrust reviews, the highest since 1976. Pretty extraordinary. And here we just pick up some names that you recognize. There are a lot more smaller companies that you may not know about. So what do we have? We have Big Pharma. We have Oil Energy, Occidental, was owned by Warren Buffett, also one of our core recommendations, now under the review for their Crown Rock acquisition. And then now the news is also moving to more big tech. Like I said, a few days ago, we have possible probes into Microsoft and NVIDIA and OpenAI for the AI-related antitrust cases or anti-monopoly cases. And then about a year ago, Lina Khan said herself that she thinks AI will be a big area for regulatory or more regulation or more antitrust probes. So she's really delivering what she said about a year ago. And what's the other extraordinary thing is that 6 out of the Magnificent Seven, okay, 6 out of the Magnificent Seven, according to this table, are under some kind of antitrust case or antitrust probes, investigations. 6 out of 7, except for Tesla. Okay, so that's how significant that is. And our view, of course, is that the Trump wins, that this lady Khan could be gone and will be less pressure on big tech and big farm with respect to the areas. And we always view this as a key risk to big tech, in that it will limit the ability to grow by M&A. So it's a pure M&A angle, right? So that will limit a lot of their merger and acquisitions when you want to expand. Paul, anything to add here in terms of Biden versus?
Yeah. Well, if that under a normal Republican, you would expect them to back away from strict enforcement of antitrust rules, but Trump could be different. And then you also remember that he kind of is angered by a lot of big tech because they banned him from their platforms. So he's no big fan of Meta, Facebook. And because Jeff Bezos owns the Washington Post, which attacks him all the time, he's no big fan of Amazon as well.
Yeah, but he's not going to. But there's also oil companies here, right? So what's the chance of we have Lena Khan gone once Trump is elected, and then relieving some of the pressure. Okay, the existing cases will go on, but at least the market will expect less pressure going forward.
Right. There's nothing will happen immediately, but eventually one of the FTC commissioners' terms will run out and Trump will replace him, and then the Republicans will have a majority, and that will slow down antitrust cases.
Okay,
so
that's scenario.
So when Trump,
scenario.
Yeah. So there won't be an immediate reaction, but investment is not over a 1-year time frame. So boom, it'll slow down.
People will extrapolate into the future. Okay, so
yeah.
So I don't think the market will move the minute that Lena Khan's removed. Right, the market will move based on expectation that in the Republican or in the Trump rule there will be less these type of investigations. Okay, litigations. Okay, so that's our conclusion. Trump winning the election will release some of the regulatory legal pressure, which is important, by the way. You will hear more and more about the antitrust cases with the stocks you own. Okay, finally on China. What's the difference? For Trump, traditionally run a old-fashioned trade war focused on jobs, focused on protectionism, and focused on trade balance. And look at what he did during the 4 years in office. He sanctioned only 3 or 4 Chinese tech companies, and it was very benign. Then you have Biden came into office. Within 3 months, he started a trade war with China and continued since then. And you had the most severe semiconductor export control on China in October 2022. Everybody knows that. And then if you look at what Biden's strategy or policy is, if you're not sure what he's focusing on, or you're surprised by any of his actions, you should go back to the June 21st report by the White House on the 100 review on the White House supply chain report. In it, it clearly laid out 4 areas in order of priority. Here, semiconductors, power batteries, critical minerals and materials, and pharmaceuticals. Again, everything that the White House has sanctioned against China, technology-wise, can fit into any of these. So Biden really delivered what he promised, and the Biden administration is really good at doing this systematically, laser focus on choking off China's technology access. And we expect that to continue. Washington Post here run an article about how Biden and Trump think very much alike on the tariffs. But here's the difference. Trump putting the tariffs on all Chinese goods, and those tariffs are still around 427 billion. When Biden announced the recent new tariffs, it was only 18 billion. People think, wow, that's too little. And so Biden is not a overall generic tariff guy. And if you look at the stuff he put the tariff on, is back to what I was saying. More about technology, more about advanced manufacturing, EVs, semiconductors, solar panels. He doesn't care about shoes and toys or Walmart products imported from China. It's really about those high value-added, higher-end products that he wanted to sanction China against. So that's the 2 differences. Again, under Biden, I will generalize this as a tech war. Under Trump, you can think of this more of a traditional trade war, and Lighthizer will likely to be back, and he will lead the charge against China. And then finally, I bet everybody want to talk about, there will be probably quick Q&A on this as well, is what about the Fed? And just to remind everybody, the Fed is always independent. This is not necessarily the election issue. As much as you want to make an election issue, the Fed themselves, they also want to make it seem more independent during the election season. So therefore, one of the key conclusions is that if the Fed has cut rates, it's going to be either September or after the election will be November. So that's one thing that's related to elections and the Fed actions. Fed does not want to be seen biased with any of the candidates, so they're not going to do anything closer to the election season, election time. And then for Biden, like I said earlier, both of these 2 presidential candidates, they're good at this. We have some track record to judge, right? So Biden has been president for 4 years. He usually takes a very traditional hands-off approach. He always go for the independence of the Fed, versus Trump is being very critical of the Fed all along. He even try to influence the Fed, even though neither of them can really do anything with respect to the Fed. And the current chairman will stay on until May 2026, so no change. But I do want to point out there's a related political matter about the housing affordability, which is related to the mortgage rates. That will be a key issue for the two candidates, whether it's presidential debate or whether it's their key messages to the public. Okay, before we stop for Q&A, I just want to remind everybody, Paul himself also ran a very successful monthly webinar on U.S. markets, right, Paul? And then the next webinar,
there you go,
20th. So the next day be June 20th, and you have another chance to participate and ask him about anything about U.S. markets, Fed, or the election. Also, Paul, can you give us a quick preview about what you may talk about on June 20th?
Well, the title tells the story, can stocks continue to rise without rate cuts? But the other thing that we're going to take a look at is that recently the semiconductor industry has replaced the software industry as the largest industry in the S&P 500. And we'll just take a little bit of look of the dynamics behind that change, why software companies are out of favor, while at the same time semiconductor companies are in favor.
Got it. Very good. Okay, we're going to stop here for Q&A. Sorry, today's session went a bit long because we have a lot of content related to the U.S. election. If you have a question, please use the window to type your question, and we'll answer in the order that they come in. Oh, we got a lot of questions in the pipeline already. I'm going to read out to you, and Paul, also please help us answer if you think it's appropriate. What if the Democrats fraud the election again? Well, quote unquote fraud the election. That's a really interesting question. It is debatable whether they really frauded it, but Paul, anything on that? Will we have another riot on Capitol Hill or like domestic?
Okay, well, I'll say that there's no evidence that there was any election fraud in the election before, but there were certainly things that could make you angry. One of the things that's weird when you look at the polls is that it is Trump is leading in the popular polls, but when you do it state by state, which is how the U.S. elects, it is much closer. So you could imagine if the people thought 4 years ago where Biden clearly had, according to the official tally, over 50% of the vote, right?
Yeah.
So clearly beat Trump in the popular vote. You could imagine how crazy town people are going to get if you had the opposite result this time where Trump has more popular votes, but Biden still wins in the electoral college. That would drive some people. You might have some crazy results then. But otherwise, I expect a peaceful election.
Okay, number 2 question. China's economic recovery. Can we elaborate on the factors that could support or hinder China's growth in the coming month? How might this impact region and global markets? Also, very good question. We actually did not prepare anything specific on China. Allow me to reiterate our view on Chinese economy and the markets. What we've been saying is that, first of all, when we're running to June or July, we're going to have a low base in terms of the macro numbers, specifically the CPI, the real estate sales, and the exports. By the way, we got some good export numbers out this month as well, even in May. So expecting June, even better numbers will come out. So this may create the perception that the economy is recovering well, and it will make it look like the policy is working. That's good for sentiment. I'm not sure about the fundamentals, because fundamentals, we can go on and talk about what are the key long-term challenges, such as real estate is still being stabilized. In the best case, in the worst case, it could continue to go down. You have the population crisis in China is a longer-term issue. And then you have the U.S.-China relations I talked about earlier, that there's overwhelming consensus in the U.S. that the relationship will probably deteriorate, whether it's the trade war or the tech war, that will put further pressure on the Chinese economy. And then what else? So that's kind of a high bird's eye view of the whole topic. We can talk about this separately on a separate occasion. So our short-term view is relatively optimistic based on the low base of macro numbers. Longer term, especially in the second half, we need to see whether, first of all, the real estate market is stabilizing. The reason being that China's already put out some really dramatic real estate stimulus policy, very dramatic policies. Now, if that does not work, I don't know what will happen. So that is the key risk in the second half of this year is hopefully the real estate will stabilize and show some signs of improvement. Okay, third question, possibility of Fed rate cut in September. Can we discuss the potential economic data events that could influence the Fed's decision, how a rate cut might attract different asset classes? Okay, I think, Paul, correct me if I'm wrong. Well, first of all, the CPI and the PCE inflation, right? Even though it is coming down slower than expected, and they're showing some stickiness, but the overall trend is still down. So the reason people expect a cut in September is that hopefully in a couple months, we will see the numbers cooling off. And the job market has already shown some signs of cooling off, but we also get some mixed signals from there. And another reason I think, apart from inflation, because there's some theory or speculation out there that whether it's the ECB or the Fed are possibly looking to a higher tolerance for inflation. So in that case, they may shift their focus not purely on inflation, but also look at the U.S. economy. So if you look at two data points, number one is the first quarter U.S. GDP was actually weaker than expected, but the market looked past that for some reason. And then number two is that consumption remained a big risk to the U.S. economy. And then if you look at the second quarter GDP forecast, it's also very volatile, but clearly showing trends of being revised down from as high as 3% now. It's just a few weeks from as high as 3% to 1.8% or something. So like I said, the Fed could cut rates based on not just inflation, but a combination of consideration of whether the U.S. Recession risk will happen and combined with that. And also, as you know, this has been talked about for a while, which is the inverted yield curve, right? The inverted yield curve also implies that there's a recession coming. That's why that could lead to the Fed rate cut. But the consensus today is also that despite the possibility of rate cut, there's only one rate cut. And that's also our view. So people are generally expecting more rate cuts either next year or maybe no more rate cuts at all because the inflation turned out to be quite sticky. Okay, number four, focus on disruptive technologies. Can we elaborate on specific technology advancement that believers will have a significant impact on the investment landscape in the second half of 2024? Investment idea related to the trends. Okay, so also a very good question. Want us to talk about the disruptive technology and how do we invest in the second half? That's kind of interesting because there's a saying that people often overestimate changes in the short term, but underestimate changes in the long term. Look at internet, for example, right? When first internet came out as a disruptive technology, people think that will change the world, blah, 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 Amazon is going to take over, but it didn't happen overnight. It happened over a very long period of time. Everything did happen, but over a long period of time, which over the long term surprised people. So same thing with everything we talk about here in AI. I think there's certain elements of AI that's being overhyped. So it's really hard to say, okay, you have to put money right away in the second half to put for the disruptive changes. So these are all AI is definitely one of the trends, and this is a very long-term investment opportunity. Even if you missed NVIDIA or even missed some of the names, I don't think it's the end of the world. Okay, so there's no rush in terms of you have to do something in the second half. Now, in terms of if you do have money to invest and wanted to position for so-called disruptive technology, our top picks right now for the AI sector is Microsoft and NVIDIA. NVIDIA, we're actually relatively cautious because the stock has really gone up a lot, and valuation was around 30 times. Now it's like 40 times. So it's no longer cheap. It's not that expensive and no longer cheap. And our view, without going into the details, is that the easing of the chip shortage for NVIDIA is actually not necessarily good news. Okay, the easing of the chip shortage is not necessarily good news. Microsoft hasn't gone up that much as a gradual uptrend, and this is our number one pick in AI right now because, again, without going into details, this is probably the only company we see right now will benefit from AI in the short term, in the medium term, and in the long term. All other big tech or magnificent companies face some kind of challenge, either midterm or long-term or medium term. There are some problems, but Microsoft is really solid in that they have opportunities and they benefit from all three time frames. Beyond technology, technology is already disruptive enough. Well, there's also geopolitical change. We talk about U.S. election. It's not necessarily won't be that disruptive, but as you can see, there's a lot of big issues like regulatory issues for disruptive technologies, right, related to FTC and Department of Justice. So these things you should pay attention to. So given the time and given our topic is today focused on U.S. election, we won't go to too much details of big topics. On geopolitical events, I want to tie this with what we talk about today in the U.S. dollar assets. Despite all the uncertainty with U.S. election, despite all the infight in the U.S. and created the perception that the U.S. is a chaotic country without hope, we still strongly believe U.S. dollar assets for three reasons. Right? As much as we care about election today, number one, I see some data like more than half of Dow Jones 30 companies have a higher credit rating than the U.S. government. What does that tell you? That tells you that the U.S. government could go down. Microsoft will still be Microsoft. Apple will still be Apple. Berkshire Hathaway will still be Berkshire Hathaway. This is very unique around the world. Probably the only country when the government can have trouble, can close down, can have Capitol Hill riots, but the company will feel nothing, including the FTC probes and investigations. I don't think at the end of the day will have that much big of impact. It's inconvenient, but it's not a deal breaker for these companies. So you can kind of see the resilience of U.S. corporations that's relatively independent of the U.S. politics. That's number one. Number two, if you look at all the geopolitical risks around the world, all the things happening, and U.S. is almost a beneficiary in each of these cases, and none of it really touches the U.S. soil or really affect what's happening within the U.S. So that's all the reason also for the U.S. dollar assets, right? If you invest in other currencies, the euro, obviously you have to think about Russia or Ukraine. If you want to invest in RMB, you have to think about China, Taiwan. If you invest in U.S. dollar, probably nothing too much to worry about in terms of the geopolitical risk on the negative side. And number three is back to what I said about AI. There's huge inflow into the U.S. markets because of interest in AI. So today, not just U.S. investors interested in AI, but foreign investors investing in AI. So the key conclusion, if you wanted me to give you a big macro view and a big macro conclusion based on whatever I just said earlier, three things, right? Resilience of U.S. corporations, geopolitical risks don't really affect the U.S. And number three, you have AI. Based on these three big changes, what's the answer? The answer is U.S. dollar assets. Okay. We answered the Democrats about quote unquote frauding the election. It seems like we have some people in our crowd really feel strongly about the election results and about Trump versus Biden. Yeah, so Paul, quick question for you. How do you share your view on U.S. election and investment implications? What is the frequency? There's a weekly post on, can you run through what you can offer to us?
Well, I do a little I do a weekly thing that goes on the Facebook page and also goes on, if you subscribe to the Telegram, you can see the video on the election process. And that is mainly newsy. I'm not telling you about investment concerns, so I'll just be updating you on what's changed. So obviously the last few weeks we've been talking about Trump's trial, and then I'll be doing one tomorrow. I'm not even sure what I'm going to speak about tomorrow.
Please, 1, 2, 3, 4. 1, you have a monthly webinar, which people will sign up. Number 2, you have a weekly Facebook, right?
I have 2 weekly Facebooks.
2 weekly Facebook. Okay, number 3, what else? You contribute to our U-Trade, the election page, right? U.S. election page.
Yeah.
Okay.
Right. So you can get. Okay.
Okay. Good. Question on C-Trip. Yes, we recently put C-Trip on core recommendations. In case you don't know, core recommendations list our high conviction, best of the best stock picks, including things like Microsoft, Nvidia, Berkshire Hathaway, oil company like Occidental. In China, we have PetroChina, China Mobile, Alibaba, and recently we put C-Trip. And we previously also talked about the secular growth in Chinese domestic tourism. And we have a non-consensus view today that people normally expect the Chinese tourism to return to a quote-unquote normal growth of around 7 to 9%. Instead, we think that China tourism growth could be higher beyond the current recovery. Once it's normalized, it's already been normalized to the 2019 level. And going forward, I think this is an industry that can grow consistently, sustainably, at an average rate, maybe not every year, but an average rate around 12 to 15% a year. Okay, so that is the overriding thesis, and C-Trip is the leading online travel agency in China with a 55% market share, with a big scale advantage that is almost irreplaceable with all the partnership with airlines, hotels, and other partners. That's why we like it. Again, consistent with our non-consensus view on the tourism industry. If you look at the consensus, the long-term growth for C-Trip is in the single digits, but because of the secular growth in Chinese tourism, we expect the C-Trip earnings growth to be double digits over the long term. Again, it's not going to be every year like clockwork, 12% a year, but if you take a longer term view, average out, this could grow at double digits earnings consistently, and which is in today's Chinese environment, it's a rare company. Not too many companies can deliver that type of growth consistently. Okay, yes, a technical question on the slides for today's call and the recording were both made available to you. Please contact your UOBKH sales for that. If you are a salesperson yourself, you can contact our product team led by Matthew. That will be Gaho in Hong Kong and Ryan in Singapore. View on the U.S. Singapore exchange rate. No. Paul, do you have any view on the U.S. Singapore exchange rate?
Well, I mean, Singapore is manages its exchange rate, so you don't have to think so hard about it. It's the band is right now a slight upwardly slope. So all things being equal, the Singapore dollar should appreciate a little bit during the next 6 months to a year versus the U.S. dollar. The thing that could throw that out is if the U.S. dollar is particularly strong against the other major currencies in that band, which are like the Chinese renminbi, the Japanese yen, and I think the euro. But all things being equal, the best way to just assume is that the Sing dollar will slightly appreciate.
Right. There's a question on whether we think or there's a chance of the U.S. market crash suddenly during or just after the U.S. election. It's a good question. I will actually want to divert this question to something else. Remember what I talked about earlier about all the U.S. election year stock performances, right? So all we have is just a bunch of numbers. In fact, one of the shops actually did some statistical analysis and shows that some of the data is really not that statistically significant, meaning that it's not really driven by election. So as much as we want to talk about stock market performance with the U.S. election, I already told you earlier that this is the data mining project, just for show, just for sharing reference. We actually don't know what is the fundamental significance of the U.S. election on the stock market. Or you can say that every case might be different, right? So there might be different reasons that the election affects the market. So it's really hard to draw an overall conclusion of how that really works. But I do want to point out that we do think about this every day, given markets at this level. In our asset allocation framework, we also underweight the U.S. stocks this year. So we're really hoping for a crash in the U.S. market. Unfortunately, it hasn't happened, a deeper crash of the U.S. market. Now, to answer your question, one possible reason is that one thing we've been thinking a lot is what if the Fed announced interest rate cut, and how will the U.S. stock market respond? The conventional wisdom would probably say it's going to go up further, right? But look like the stock market, the bond market has already gone down a lot, but the stock market has already priced in, I think, to a certain extent, the rate cut. So it'll be really interesting to see what will happen to the U.S. market if the Fed announces the first cut. I think this could be a chance where the market will go down, not go up, because number one, it's already pricing the rate cut. Look at how strong the stock market is being, not the bond market, the stock market. And secondly, is that for what reason you think the Fed will cut rate? If the Fed cut rate not just because of high inflation, as I said earlier, right? This is not a simple inflation framework anymore. So if the Fed not just cut rate for the inflation, they cut rate because the hard landing in the U.S., for example, then of course the stock market will react negatively, I think. Right? So it's also depending on what's the real reason behind the recession risk, I think, is still there based on an inverted yield curve, based on mixed signals